Hey everybody, welcome back. Sive Morten is here with the Forex Peace Army.com. Let's take a look again on the Forex market as usual on the weekend. So as usual, once again we have prepared the weekly report on the Forex market. I will put the link down below the video if you would like to read it. This time we have touched a very interesting topic. By our view, actually market has missed a lot of things, just because everybody were busy with the Donald Trump tricks, first with the Tomahawk missiles, then with the China 100% tariffs, which is terrified the overall society on the markets. And Donald Trump was really on fire this week, changing mind almost every day in the opposite direction. So it makes market to be sick, and actually the hangover has happened on the Bitcoin, as you already could see. But under all this noise, there are really big events have happened. So we think that the hot point of the last week is not with the Donald Trump statements on the geopolitics, but with the Jerome Powell statement, with the liquidity issues that we have for the United States, inside the United States actually, and some other things on the domestic arena, in particular the collapse of the tricolor and actual exposure of this collapse of this default on the regional United States banks. Maybe you have mentioned, but have you seen this a bit strange for just simple coincidence that simultaneously we've got a statement from the Powell of the end of quantitative tightening, promising of the Fed cut. Second, liquidity issues that he has mentioned in his statement, which we actually talked about in the recent months. As you know, almost every weekly report that we have prepared in the last 3 weeks, we have mentioned liquidity issues in the United States market. And third, the collapse of the auto loans companies and big exposure on regional banks. So now this is Zion, this is Jeffries, and some other banks, and even big banks have been hurt. We see that it's not the occasion. Together with some other issues, the promising nearest couple of weeks will be really exciting. Why? Because by the promise of the government of the United States and statistics, we should get the CPI report this week, or I said next week, on Friday. And just imagine what will happen if the numbers will be slightly higher. If it will show that inflation is rising. Yes, on the intraday charts, it might provide some boost in the moment of the release, but after the week after, the Fed will cut the rate, and it will cut it on the background of the rising inflation. What will happen with the dollar? Overall, this situation that we see currently inside of the United States on the background of the shutdown as well, it also brings some really tricky situation. So while in Europe it's more or less everything is stable. Yes, they have big structural problems with the deficit in France, as you know, in Germany, everywhere. But these problems are structural. They're very long term. And they will not have some immediate impact on the markets in some kind of the surprising effect or something like this, unexpected effect. So taking it all together, we suggest that dollar probably might appear under the pressure in the nearest 1-2 weeks. So this is our suggestion, because behavior of the Jerome Powell, his sharp reversal in his statement makes us think that probably he is giving up, because he left just half a year, at least his end of his term, and he do not want to be associated with the worst Fed chairman in history that led the United States country to the collapse. He will do everything just to postpone this, let it collapse somebody else. So he did not want this. And probably he now, with the actual statement that he has made, definitely he's got the hint from the Basin, from Donald Trump, and we do not expect that he will be stubborn in the moving on the dovish side. So taking it all together, it will be really bumpy performance in the dollar in a couple of weeks. And from the technical point of view, there are also reasons for that. So I will show you a longer term chart. Usually we're not considering it in the videos, but it might be important to understand what's really could happen from technical point of view. So you all, of course, know this ABCD pattern. This is dollar index. weekly chart. And on the euro currency, this target has been completed. It stands around 119.20 if I'm not missed something. It has been completed last month, but you could see that the dollar index hasn't completed it yet, which means some weakness here is possible. It doesn't mean that euro currency will start some big rally, but it means that euro currency could show high action in the nearest time. Maybe it will return back to the top, or at least it will flirting around, calling around the top, while the dollar index will trying to complete the OP. Anyway, from the technical point of view, incompleted, big target that stands slightly below the market. It works like a magnet. There's a big chance that market at some moment will try to complete it. This first moment. Second moment, here market starts showing some kind of the bearish dynamic pressure. So we see that the trend by the MACD remains bullish, while the price action is not quite bullish. It's forming the low lows and low highs sideways action, which means that it might be at some point downward acceleration or something like this. So overall situation remains really difficult and really tricky on current background factors that we have. Just keep in mind this. Now let's turn to our trading plan for a coming week. Actually, on Friday we've got the thing that we expected to get. So if you remember, we said be prepared for a pullback to the 1650 support area, where we consider taking the long position. Because nominal trend on the daily chart is bullish, we suggest some upward action. What the upward action will be, currently it's not very important, whether it will be just minor pullback or it will be upward continuation on the euro currency, which is also possible. In fact, if you remember, our plan on the 4 time frame chart looks like this. So we have big head and shoulders, and for euro currency to prove us that it is really bullish and it's ready to show some upward continuation, it has to form at least something more valuable. And we think that these head and shoulders might be really good proof that market is ready to show more extended upward action. But it's still a long way until the resistance level 1775. So currently we have the potential entry set up on the long side, and at this moment we are not really care about whether it will be a continuation to this target or it will be just minor action. It's minimum target of this setup, because for us the major point here is to get the position, so to get the correct entry in the current trade, and then we will see what to do, whether to close or split position in parts, or to wait when the market will keep going to 1775. We will see. So for Monday we need to understand what to do around 1656 area that actually has been touched. The background for this is a momentum trade, or those who are familiar with the Jordan-Napoli terms, this is bread and butter buy. So we have good bullish thrust, first retracement that has reached 30% support, and based on this momentum, market has good chances to bounce or even to continue. That's the background. Now what I would watch for, and I will watch for on a market before the pull is triggered. I will use the 30-minute chart. Usually I use hourly chart, but 30-minute chart shows better the picture. So personally, I would watch for something like this. So we have this drop. To step in, I prefer to get reversal patterns as a confirmation on the lower time frames. In particular here, I would prefer to get the reverse head and shoulders. Maybe shoulder, head. As you can see, clear butterfly here has been formed, which is very often becomes the part of the hand shoulders pattern. Once we will get this performance, it's possible to step in, I suppose, somewhere in an area of 1665, 1670 maybe. In this range, it will be possible to consider entry. And that will be good confirmation that market indeed is preparing to bounce off the conference support that we have. Second pattern might be the double repo buy. That's for those of you who know the actually Jordan-Napoli patterns. We have great thrusting action. First close above the 3x3 moving average. Second close and moving and forming the new lows. Once market will close above the 3x3 once again, we could get the double repo buy. So probably double repo will trigger a bit earlier than the hand shoulders, but it doesn't mean that hand shoulders will not be formed. Very often they are forming together. So you could choose what you like more. Anyway, initial stop will be somewhere below the head, I suppose. Using of these small patterns is a very useful and handy tool, just because you could actually save lots of money on the stop order, because you do not need to consider some big patterns on the daily chart, on the full time frame chart, such a moment where in placement where you have to hide your stop. You could deal with the particular small patterns that will save lots of money if we will appear to be wrong, if somehow market was to keep dropping. Of course, it's needless to be say that we should not enter if we will not get the patterns that we would like to get. So if you will see that markets just keep going lower, we are not taking the position because double ripple has not been formed, right? So if hand shoulders will not be formed, market will not reach the neckline, start flirting here and start dropping, we also will not take the position. Just keep the common sense to this approach and keep watching what will happen here around. For now, that's approximately the plan that we intend to follow. Then see what will happen.